Hey, it's Clay Trader, and this will be a video chart on THWI. Before I get started, I would like to note to please check my IRP disclaimer. With that being said, very interesting chart taking shape here for you risk versus reward, bottom feeders, bounce players, whatever you like to call yourselves. Definitely appealing chart with the way the price is pulled back. So I want to go through, the bottom setup, the risk versus reward, like I said, whatever you like to call it, setup, and see what happens, the remainder of this week. Because last time the price was down in this area, good things happened in the following week. So let's just first start off by mapping out these key levels of support. The first one is simply going to be this low down here, right at 8 cents. So I'm going to get this changed to green. And if you're experienced with charting, maybe you're already seeing why this is an attractive level, but real quick, you can see here this level has a lot of history with the chart. Although this area here didn't quite hit it, pretty close again, and then again right there. So this 8 cent level, needless to say, has a big history of being a support level. And then for the gap players out there, the people that always follow those gaps, you can see that another support would be right here at the high of this candle, which is 7 cents, because that would be the gap close right there. So I'll include this level also in the chart. But the point I'm trying to make is there are two very historically important levels here. Here's the gap player level here at 7 cents, and then for the people that like to just play previous lows, you can see multiple previous lows right here at 7 cents, and like I had pointed out. And now given present period where the price is, you can see it's right down here in this support zone, if you will, area between 8 and the 7 cents. The chart had been getting good volume, and it still is getting above average volume, but you can see a nice move here, but the big bad purple line here, which is the 50-day simple moving average, came in, acted as resistance and did knock down the price. But the interesting thing from the volume perspective, an important part, is volume has been decreasing. And then with today's candlestick, you can see, and I don't mean to state the obvious, but we got a green candle here today. So good to see that the price hopefully has found a bottom, and it would make sense, again, because historically speaking, these are levels of support. So for the bottom feeders, risk versus reward players, this area down here, definitely an attractive area, given what has happened last time it was in this area. And if you can't see that, you can see the last time the price was down in these areas, a big move has followed, well over 100% move. Now, am I saying that there's a 100% guarantee that a 100% move is coming here? That's not what I'm saying. All I'm saying is look back at the chart history. Last time the price was down in this range, a nice move happened. But you know what? Let's just be conservative. Even if it just bounced up here again and retested the 50-day simple moving average, that's still a nice percentage move. So, it's one of those things where I'm not saying it'd have to come all the way back up here, but even a somewhat modest bounce would still produce good profits from where it's at now, and that's why the risk versus rewards are so appealing, because you can obviously control your risk by using a stop loss, but at the same time, that's where the discipline part comes in. If you're not disciplined, but then there's really no such thing as a risk versus reward. So you can keep your risk minimal with the stop loss, but if it does go up and head back up to make a bounce, whether it be the 50-day simple moving average or even higher, you could be looking at some very nice gains. But it all starts up front with the proper entry and making sure you're disciplined. And given these two support levels and the history they had back here in October, it's one of those things where it should be on your radar for the remainder of the week, and see if history repeats itself by making any sort of bounce like it has in the past. So again, I'm not saying it's going to go right back up to the 20s, but even if it came back up here and retested the 50-day simple moving average, that'd be a great little move in and of itself. But if it did come up here and then was able to get through the 50-day, then obviously the percentages are just going to keep on adding up. But obviously watch volume. We finally got the green candle on less volume, so if the price does continue to go sideways or maybe pull back a little bit more, that's where we want to see volume decrease a little bit, or at least stay the same. But any sort of upwards movement, that's where the bigger the volume, the better. So keep an eye on it. Let's see what happens. But for the disciplined traders, it's right back to where it started before the previous big move. So definitely worth getting on your watch list and seeing what happens the remainder of this week. So if there are any other questions on the chart, please let me know. If not, once more, this was THWI. Thanks for listening.